Welcome to the Nevada Department of Taxation's Introduction to Commerce Tax Training. The information in this video is provided as of March 1st, 2017. In this module, we will discuss the Commerce Tax Credit Against Modified Business Tax, or MBT. Businesses that pay commerce tax receive a credit for 50% of the commerce tax paid against MBT. The commerce tax credit is a non-refundable tax credit that is reported on the MBT return, reducing the amount owed for MBT. There are 4 eligible quarters that the credit can be taken in, and if the credit cannot all be used in one quarter, it does carry over until those 4 quarters expire. Except for affiliated groups, only the business that pays commerce tax can claim the credit. The credit does extend out to members in an affiliated group, but only once they have been approved by the department. Here's an example of the eligible quarters that the commerce tax credit can be used in. For the commerce tax return due for the 12 months ended June 30, 2017, a return that will be due August 14, 2017, the credit may be taken on the MBT return starting with the 3rd quarter 2017. If the amount of the credit is higher than the liability on the MBT return for that 3rd quarter 2017, the unused credit may be carried forward to the 4th quarter 2017, then to the 1st quarter 2018, and finally to the 2nd quarter 2018. If there is still unused credit after the 2nd quarter 2018, the credit does expire. The credit for each commerce tax period can only be used in those specific 4 quarters. If necessary, the MBT return can be amended within the statute of limitations to take the credit. Now that we know when to take the credit, here's an example of how to report the credit. First, on this commerce tax return, there's tax due of $4,980, all of which was paid with the return. The commerce tax must be paid before the credit can be taken for MBT. The credit is equal to 50% of the commerce tax paid, which in this case is $2,490. Moving down to the MBT return, the credit is taken on line 10, reducing the amount owed for MBT. We'll use the same example in a different scenario. Here the taxpayer cannot take the entire credit in one quarter. Again, we have $2,490 in credit generated by the commerce tax paid, but the business is not going to owe enough MBT to use the entire amount. On the MBT return, the credit reduces the liability to 0 using $1,475 on this return. The unused portion of the credit, $1,015, can be used in one of the other eligible quarters. The commerce tax credit reaches out to members in an affiliated group that have one central payroll provider upon approval by the department. This allows the payroll provider to take the commerce tax credit on its MBT return for the commerce tax paid by affiliated entities. The detailed information that we will discuss for the affiliated group status can be found in the adopted regulations, sections 8 through 12. So first we need a couple definitions. Affiliated group means a group of 2 or more business entities, each of which is controlled by 1 or more common owners or by 1 or more members of the group. And controlled by means direct or indirect ownership, control or possession of 50% or more of the ownership interest in a business entity. Let's go over the requirements for the payroll provider to qualify. First, it has to be part of the affiliated group as we just defined. Second, the payroll provider must provide payroll services for 1 or more members of the affiliated group. Next, the payroll provider pays wages to employees who provide services on behalf of 1 or more members of the affiliated group. And last, the payroll provider reports and pays MBT on those wages paid to the employees who provide services on behalf of 1 or more members of the affiliated group. The payroll provider needs to meet all 4 of those criteria to qualify. The employees receive wages from the payroll provider and those wages are reported on the payroll provider's MBT return. But those employees are providing services for the other members of the affiliated group. The payroll function is just centralized in one entity. Next are the requirements for the affiliated members. Each member of the affiliated group for which a tax credit will be claimed would have a liability for MBT if the persons who provide services for that member were treated as employees of that member rather than employees of the payroll provider. Stated another way, if the payroll was not centralized in the payroll provider entity, would the member have a liability for MBT? Currently, there is a $50,000 wage threshold before tax is due for MBT. So the member of the affiliated group must have attributed wages over $50,000 in a quarter in order to claim the credit. Otherwise, the commerce tax credit generated by that member becomes unavailable. Showing this wage allocation is part of the application process, which we'll talk about shortly. Let's walk through an example of the credit for affiliated group. We have Parent Co. Inc., and it owns 100% of 4 entities: Payroll Provider Incorporated and 3 operating LLCs. Payroll Provider Inc. is the employer, and it pays wages for all employees in the affiliated group. Payroll Provider files the MBT return. The LLCs are the operating entities, and they generate revenue subject to commerce tax. Since all employees receive their wages from Payroll Provider, the LLCs do not file their own MBT returns. But they are separate entities for commerce tax, and they do file their own commerce tax returns. Here's the commerce tax reporting for the example. Parent Co. and Payroll Provider do not owe any commerce tax, but the LLCs are the operating entities, and they generate the revenue. LLC number 1 paid $1,000 in commerce tax, LLC number 2 $5,000, and LLC number 3 $9,000. So the group has paid a total of $15,000 in commerce tax, 50% of which would give us an available credit of $7,500. Once the status of payroll provider has been approved by the department, the credit generated by the LLCs can be taken on Payroll Provider Inc.'s MBT return. The affiliated group payroll provider application is available on the department's website under tax forms and MBT forms. Completing the application is next, and we will use the same example with Parent Co., Payroll Provider, and the 3 operating LLCs. At the top of the application is Part 1, where the payroll provider is designated. Box 1 will be the payroll provider's 10-digit taxpayer ID assigned by the Department of Taxation. Box 2 is the payroll provider's legal name. Boxes 3, 4, and 5 will verify the controlled by criteria. Enter the entity that controls the payroll provider, the percentage ownership, and a reference number for the supporting document that verifies the information. A supporting document needs to be attached with the application to prove the ownership percentages. Federal tax forms such as Form 851, Schedule K, or Schedule B of the 1065 partnership return are acceptable. Other company formation documents such as partnership agreements, stock ownership, articles of exchange, or corporate minutes are also acceptable. To verify the gross wages, 1/4 MBT return will need to be provided. For Box 6, enter the total wages on that MBT return, and Box 7, the reference number for that supporting document. Moving down to Part 2, here we are going to show how the wages paid by the payroll provider are allocated between members of the group. The operating LLCs are the entities that generate the commerce tax liability, and the wages paid by the payroll provider are for services those employees perform for the LLCs. Box 8 will be the 10-digit taxpayer ID assigned by the Department of Taxation. Check the box if that entity generates a commerce tax liability. Box 9 will be the group member's legal name. Similar to Part 1, Boxes 10, 11, and 12 will verify the controlled by criteria, list the controlling entity and percentages, reference and attach documentation to support the ownership interests. In Box 13, enter the wages that are attributable to each affiliated group member. In order to qualify for the payroll provider to take the credit, the group member would need to have an MBT liability if the payroll was not centralized with the payroll provider. In Box 14, reference the supporting document for the allocation of wages. Documents showing payroll reimbursements between the affiliated group members, payroll and cost reports, or intercompany reconciliations would be acceptable. Here's the application with Parts 1 and 2 combined. Part 1 was the payroll provider's wages reported for MBT, and Part 2 is showing that those wages are allocated to the LLCs. The wages in Part 1 must match the total wages in Part 2. Part 3 of the application is used to describe and reference the supporting documentation provided. The supporting documents should be sufficient to determine that the affiliated group exists and that the commerce tax credit may be taken. The details showing employees' personal information, including their names and social security numbers, are not required. The last part of the application is Part 4. The application can be signed by the taxpayer's authorized representative. Check the certification box, fill out the name, title, and email address of the representative, and date the application. A typed name is acceptable as a digital signature. Mail the application and supporting documents to the department's Carson City address. Finally, a few important notes related to the credit. The credit is only available after the commerce tax has been paid. If there is a deficiency in the payment of commerce tax, the employer is not entitled to the commerce tax credit until that deficiency has been satisfied. The department may revoke or cancel the designation of an employer as payroll provider if the employer no longer qualifies. But that revocation does not preclude the department from designating another employer as a payroll provider for the affiliate if it does qualify. Thank you for watching this module. Please be sure to watch our other videos for more important information on commerce tax. Thank you.